To play with y'all this. Uh-oh, where did Jeremy go? Well, this is really working out for us this week. Not sure what's happening here, everyone. This is super fun. We thought we'd be fun and try out a new video, but Jeremy, I don't see you at all. It's like it's only letting one of us in. This is amazing because we just talked about what happens if we have technical difficulties. Can you hear me at all? Yeah?
Yeah.
There you are. I don't know why I'm not showing up. And there we go. We got it to work this week. Thank you, everyone. See, guys, we're trying something new. We thought we'd do a fun intro, but, you know, we kind of suck at this, so.
Well, I mean, I figured since you replaced me in the graphic with Jaime, I figured I was just kicked out and you weren't going to put me in here anymore.
Well, for all those that don't know, Jeremy left for a week of Unaccountable podcast. So, you know, it was about time to get someone else in there. But I'm going to get everything set up. And Jeremy, for those people that haven't played before, tell them what they're in for today.
Yeah, for sure. So first of all, if you're seeing us right now on LinkedIn or YouTube, like go to the registration link and get in live or you cannot play. So if you are seeing this is getting live streamed. We'll try to be appropriate for that. But you can see it there, but there'll be a delay and you won't see it live. So you can, just go in. And then also, if you used a fake name, change your name, right?
I don't think you can change it. You just have to tell us now who you are.
Oh, yeah. Yeah, put us in the chat, right. So if you win, we know we can get the prizes to the right people. And also, clearly, there are technical difficulties. if something happens, wherever, like the Kahoot, if it fails or anything like that, we'll take the leaderboard at that time, or we'll do some kind of raffle with people, right? We'll try to make everybody whole. So
we'll figure it out. But everyone, we are so excited to have you to the 4th instance of U-F.A.T, Unaccountable's Fortnightly Accounting Trivia. And just real quick, I'm super pumped for our sponsors. Like, thank you guys, because we don't have money to give out prizes, but Double, Relay, and Digital Bookkeepers Association do. So super thanks to them. I'm going to give you guys a hot second to make sure that you scan that QR code or go to kahoot.it and enter that code, because in about 30 seconds here, we're starting the game. Now, as a reminder for everyone, this is fastest fingers. So the sooner you buzz in the answer on your phone or mobile device or separate tab on your browser, the sooner you buzz in, the more points you get. So with that being said, we're not wasting any more time. We're just going to go for it. Let's play. And Jeremy, there's a theme this week. I want to see if anyone guesses it after the first question. But as always, we're going to start off with what I think is a softball. It might be the hardest softball yet, but regardless, we're going to do it. The question being, a cash basis business. Which one of these scenarios should be when they recognize revenue, Jeremy, for a cash basis business? Your options are when a customer writes and mails them a check on New Year's Eve, when the work is performed on Boxing Day, when the invoice is issued on Christmas, or when the check is deposited into their bank account on Groundhog's Day. You have 4 options. Cash-based business. When are we recognizing that revenue, everyone? You got 10 seconds left. And I'll be honest, Jeremy, this week, I put some harder questions in here just because I wanted to see like how well people would do. So I did up almost every single timer to 30 seconds this week, or 45, depending on a couple. All but 3 of you getting it right. Yes, cash-based business. We're recording that on the day it comes into the bank account. Cash basis. Now, Jeremy, you guys get tricky in there with nonprofits because like there's when you recognize it as a donation and when you recognize it as revenue, right?
We do, but if you're cash basis, it should be the same as a for-profit business. So thankfully, not adding one additional complexity to the nonprofit world. But I also hope if this is Groundhog's Day, we get that day over and over and we keep getting that deposit like the movie.
Yeah. Bill Murray mode, man. I am all for that. All right. So everyone, if you have not figured out, the theme today is RevRec. That's where we're living, or revenue recognition if you don't like abbreviations. But this game show format only gives me like 90 characters a question. So there's a lot of things that are concise. We're going with RevRec.
Yeah.
So Jeremy, let's jump into question 2. And Ben Stein's Beer Stein Bar collects money for all of the following revenue items today. Which one of these will he pay sales tax on? Is it auto gratuity on groups of 6 or more, the sale of a gift card for future use, advance deposit on a party room rental, or tips collected to be paid out to the wait staff?
As I have said before, tips are problematic. You gotta be careful with that stuff.
I'm not biting on that one. I'm not giving you any more rope.
Oh.
I don't want to get canceled this quickly. All right, we got 1 second left. Ooh, okay. Majority of you getting this one wrong. So let's go through this. Sale of a gift card, Jeremy. You recognize that revenue later when the gift card's redeemed on accrual basis, right?
Yep.
So we're not going to pay sales tax right now because we don't know what they bought. They could have, maybe paid for a room rental, which, by the way, advanced deposits on a party room rental, usually not taxable. A service isn't usually taxed. And tips paid out to your wait staff, well, if it's a tip and it's voluntary, it's just passed through the business. If the customer gives that money voluntarily to your staff. But if your business or your customer's business, your client's business, has an automatic charge that the customer is compelled to pay, it's compulsory, not voluntary, it is now subject to sales tax. We see this in hotels as well. If like, hey, we have a mandatory pet fee. If you want to have a pet in the room, you do not have an option. We're charging you for it. And it's required to be able to get the room. It's now taxable.
Yeah, right. And the ideal state with the gift cards is they never use them, right?
Yeah, right.
Tax out. I just got that.
Breakage, man, is wonderful. Actually, I don't even know that off the top of my head. Would breakage on a gift card after 5 years, is that taxable?
Would it be? You'd need a breakage shrinkage policy, right?
Yeah, Jeremy, do not get us canceled. I see where you're going with all of these.
I'm sorry.
All right, let's see where we're at real quick with our current contestants. And the numbers guy, no idea who it is. Hopefully you're saying in the chat who you are, because Jeremy, you better be keeping track. Someone better claim it. Katie's sitting in second. I think that's our gal Katie from BL. And Emily's sitting in third. All right, folks. Top 3. Deanna, are you in last? Way to go, D. Way to represent. All right. So glad you're back, Deanna. Welcome back to accounting. All right. Question 3, everyone. And speaking of RevRecs, on a 2017 trip to Colombia, which world leader joked, "Somebody punched me," after getting a black eye in his custom ride? Was it Paul McCartney, the Pope, the Dalai Lama, or King Charles III? Jeremy, do you see what I'm doing here?
I do see this a stretch, but I like it. And our numbers guy is Greg.
Is it? Oh, way to go, Greg Cullup. All right, man.
Yep.
I mean, I'm rather proud of this question. It's almost like the Rick Moranis one, right? Met Rick last week. Metrics.
Yes.
Yeah. Because for those of you who didn't figure it out, I said this round was all about rev wrecks, and so a reverend getting in a car wreck was as close as I could get, a rev wreck. But the Pope got into a car accident in his Pope mobile back in 2017, rocking a black eye. There's your rev wreck question for the week.
Could we refer to that as a papal purple eye?
That sounds like a new thing I'm going to go visit the doctor for. Thank you, Jeremy.
Yeah.
All right, who's sitting out there? I'm going to keep score updates all the way until like halfway through. Greg's still sitting up there, an amazing emu. Do we know who that is? We'll have to go look at this. Corbin, don't even, man. This is education as its finest. All right, Jeremy's going to figure out who's sitting in third, but we're going to keep running. Question 4. Part of recognizing revenue under GAAP, we're gapping, folks. A contract with a customer must meet certain criteria. Which one of these following items is not a criteria for a contract to be valid? I'm going to give you 4 options. Here we go. Is it all parties have approved the agreement? Each party's, because there's an R, each party's obligations are identified, payment terms are identified, or the agreement is in writing? Which one of these is not a requirement of it being a valid contract? Not. See how it was bolded and italicized because they won't let me use underline?
Very clear.
Yeah. All of those are required for it to be a valid contract, but 4 of you getting it right, it actually does not have to be in writing to recognize revenue. If it's, according to GAAP and FASB, it is if it's implied or if it is, oh my gosh, I already forgot the term. Sorry. This is awful. If it is understood or implied. Yeah, whatever. Jeremy, how do you type as me? You're showing up as me in the chat. This is disturbing.
Oh, that is fantastic.
I know. Jeremy getting to put words in my mouth. All right, sitting after question 4, Greg's still in the lead, and I'm guessing lead the way is our girl Lideker coming in. Beth's sitting in 3rd if she's the emu.
She is.
All right. Getting close to no more point updates.
And if nothing else from this, don't put it in writing, right? That's what we want.
Yes.
It's still recognize the revenue.
Yeah, oral agreements count. There's a whole bunch of other things, and I wasn't going to put up the slide deck I went through while practicing and sit for the CPA exam, but there was a lot of boring stuff in there. All right, question 5, I think. But in Chicago in 2024, speaking of another wreck, this famous vehicle had a rollover accident that the police described as a rather frank accident. Is it Chitty Chitty Bang Bang, the Mystery Machine, the Oscar Mayer Wienermobile, or a replica of the Magic School Bus? What vehicle? And I'm really helping you guys out here.
I can't believe you didn't put the Planter's Nutmobile in as an option.
Is that a thing?
That is a thing. And if you haven't seen
Nutmobile.
It, glorious. And who could be unhappy when they're riding around in the Nutmobile? It's fantastic.
Who invited you? Many of you getting it right, maybe because I flashed it on screen for you. The Oscar Mayer Wienermobile. Bad choice of words to say flashed it on screen. But Wienermobile got in the accident. There's some great pictures of it blocking the highway. Also, plenty of pictures of Oscar Mayer Wienermobiles getting stuck in under bridges and tunnels. Don't know who didn't see that one coming, but apparently there's a lot of these roaming around the U.S.
There is,
yeah. All right. This is my last points update, everyone. From here, we're going dark. But Greg with a masterful lead at the moment. Katie climbing back in the top 3, and Emily sitting 3rd. Everyone else, best of luck. Deanna, do you have 2? No, there's 2 Deannas. This is disturbing. All right. Yeah, I know. All right. We're done with score updates, everyone. From here on out, we're going blind. Question 6. Jeremy, the IRS just surprised us by announcing what?
Yeah.
Did they announce auditors will now presume guilt unless proven otherwise? A new mid-year mileage rate change? They're now printing checks again? Or IRS bank accounts designed for business owners?
That last one be like the Trump accounts for businesses. You start a business, you automatically get $100,
$1,000.
Yeah.
I'm starting a lot of LLCs this week, Jeremy, if that's the case.
Yeah, all right.
Oh, man. We got 4 seconds. What's everyone going for? Almost everyone getting it right. Yes, a new mid-year mileage rate change. I don't even remember. It was like 72 to 76 or something. I really should have.
I think it's 76, I believe.
Okay.
Yes.
Again, we don't have the budget to do actual research here, okay? I was putting together the slides this morning. I mean, I wouldn't be surprised if the answer was they're now going to presume guilt unless proven otherwise. Although I feel like that might be the standard already.
Yeah, and did anybody else think like the analysts or whoever are assessing whether the mileage should be changed mid-year could have better things to do, like maybe answer the damn phone, put them on the phone line or something if they're there. Jeez.
Yes. And by the way, like IRS bank accounts designed for business owners, I don't think that the IRS could actually get bank accounts right. But you know who can is our plot twist sponsor. Thank you so much, Relay, for giving us a nice second place gift card to give away today. I mean, guys, we got to thank our sponsors because otherwise we wouldn't have prizes. And let's just real talk for a second. But when is the last time you actually had a bank feed that didn't break on you? Yeah, my point exactly. Relay is the business banking platform built for accountants and bookkeepers. You get a single login across all your clients, plus bill pay, invoicing, expense management, all living in the same place. The integrations actually sync with QBO and Xero, and they don't break. I mean, that's the best part. It's banking built for the people behind the books. You spend less time reconciling and more time being the buyer to your clients. Thank you very much, Relay. Please keep coming back.
Yeah, and great call out by Emily in the chat. That 76 was probably for 1976, our 250 anniversary. Like, we're gonna try to get some
You think so?
some national pride in our IRS mileage reimbursement.
Okay.
I like it.
I mean, I wouldn't be surprised, but they would have made more of a hoopla about it.
Yeah,
all right. 4 more questions to go. All right. When Jeremy starts selling his custom-built Batmobiles, which service line on his invoices must have sales tax applied to it? Of these 4 lines, they're all service items, but one of them has sales tax applied. Is it a 3-year service agreement required by the state, a 4-year optional counseling service, probably to console you for buying something from Jeremy, 2-year add-on extended warranty, or 1-year free car washes, but Jeremy's in a bathing suit performing them?
First of all, I look fantastic in a banana hammock, one. So like that. Also, not to influence anyone in the last 7 seconds, but just wait till you get that call from me and my Batmobile service. I've been trying to get a hold of you to talk to you about your Batmobile warranty.
Exactly. Yeah. Only one of you getting it right. And there's a reason here. This is interesting. I'm super curious to go back later and see who got it right. But first of all, let's just talk about it. Jeremy doing free car washes. Actually, all the wrong answers. The thing about them is they're not required when buying the vehicle. But if you cannot buy the vehicle without these extra services, and it's never an add-on item and it's a service, you have to charge tax on it. So if you're selling a vehicle for $42,000, but you break out the invoice as $40,000 for the car and $2,000 for the mandatory state warranty, nope, you can't do that. You can't play the games. The state says, no, you can't buy the vehicle without it. It's part of the vehicle purchase. You have to pay sales tax on it. So super interesting. If it's compulsory, it's taxed.
But the Jeremy bathing suit car washes probably should be required.
Well, it's not taxed because no one bought it.
Oh.
Yeah.
There must be a picture.
Notice I did not put that GIF on screen, which oddly enough, I have video footage. I could have made that GIF. But I digress. Let's move on. 3 more questions, everyone. Okay, we're getting hard here. I'm not going to lie. I went hard on these last ones. But under GAAP, which revenue recognition method of Beth's bedazzling is not allowed? Okay, Beth's bedazzling and selling her products, and she can recognize revenue correctly under 3 of these following 4 processes, but one of them is not GAAP compliant. Which is it? Is it at a point in time when the product is delivered? Is it at a point in time when stored in Beth's warehouse per the customer request? Is it at the time the cash hits her bank account? Or is it spread out over the time of the life of an agreement? You got 15 seconds. One of these is not allowed under GAAP. GAAP.
Yes, very important. That also
wasn't this so cool that Beth actually made this?
Oh wait, I got it right here.
Oh, you got it?
Yeah, she didn't send you one.
Nope, I'm not cool enough. But many of you getting it wrong. The answer is at the time the cash hits her bank account. Yes, the IRS will let you file on cash basis, but GAAP principles require the matching principle, which does not allow for cash basis financials. Not a problem. Like, there is no law that says you have to have GAAP financials to go to the IRS, but publicly traded companies, you cannot have cash basis financials. Now, the trick here is at a point in time when the product delivered, that's fine. You can also do spread out over time, that's fine. Or you can do at a point in time if the product is ready to go to the customer, it's set aside for them, but the customer says, hey, I don't have room to accept it. Can you hold on to it for 6 months? If the customer asks for it, you can still record it as revenue because it is the customer's. You're just holding on to it per their request. Nerd alert.
Yeah, nerd alert. And then you gotta and then there's like who owns it as of when and whose insurance is it covered by something. Oh God.
Oh, the insurance side, I'm not even gonna try and speculate, but the IRS has been very clear. If it's set aside, can't be sold to anyone else, and it's whatever at your warehouse, you can recognize it as revenue without even getting it to the customer. Anyone want to come at me? Bring it, because I've been studying like crazy. All right, we got 2 questions left, Jeremy, and I'm not gonna lie, I went really hard on these 2. So good luck, guys. All right. GAAP again. If a contract that has multiple obligations on it reflects a discount as well. So you have multiple things you're delivering and there's a discount applied on the invoice. The appropriate way to assign that discount is how? Is it assign the discount equally across all the obligations? Assign it to the obligation with the highest standalone price? Allocate it proportionally to all the obligations in the contract? Or reduce the smallest obligation by the full amount of the discount? Where are you going to put that discount on the books, on the invoice when you bill it?
All the more reason that both us and any of our clients should not offer discounts and make accounting harder.
And again, this is only if you're doing GAAP. The IRS doesn't care.
Yeah.
Oh, wow. Almost all of you getting it right. Yes, they say spread it out proportionately. So if you have a $100 invoice with $10, $20, and $70 items and a $10 discount, you put $1, $2, and $7 discounts to each of those. Way to go, everyone. I thought that was going to be a little bit harder for y'all, but many of you getting it right. Good job. All right, Jeremy. We got one question left. One question. And this one this week, I am calling the big toughie. And I gave extra time on this one because, again, I've been studying lately and doing a lot of RevRec practice tests. So I'm putting you guys through the torture I'm in. But if a construction company using the point-in-time revenue recognition method on a 4-year contract realizes that in year 3, this project now is going to run a loss, what do they do? I'm going to give you 4 options about year 1, year 2, year 3, year 4. One of these is true. So they realize that in year 3, okay, this project is not going to produce a profit anymore. We're actually going to go into the negative. Which of these is true? Do they recognize the entire loss in year 4? Do they recognize the estimated total loss in year 3? Do they recognize part of the profit in year 2? Or do they recognize all the profit in year 1? So year 1, you're like, hey, we're going to do a profit. Let's recognize it all. Year 2, oh, here's part of it. Year 3, oh, let's recognize the estimated loss. Or year 4, let's take the total loss.
Wait till it's done. This one's interesting because I saw this one and I had to think through it as well. And I'm just trying to think of the real life scenario.
Yeah.
And you have to know all of your costs in year 3. Like if you
have to know your estimated costs with reasonable assumptions.
Yeah.
But there's actual rules. And I mean, the goal is like, if you're going to take a loss, you want to record that loss as soon as possible, right? And most of you getting it right in year 3, you recognize it. So let's say, Jeremy, we have $1 million project here, and we expect we're going to make 200,000 in profit, so 800 in expenses. A point in time recognition says we're going to wait to recognize all the profit until when we sell the asset, right? So you recognize 0 revenue in year 1, 0 revenue in year 2. In year 3, though, you're like, we're actually going to spend 1,100 or 1.1 million on this. You record negative 100,000 in year 3, recognizing the estimated loss now. And then, in year 4, it turns out we lost 1.2 million. You record an additional 100,000 in year 4, but you get to take the loss as soon as you're realizing it. You do not wait. If you continue to run a profit, you record the profit at the very end of the project, all the way at the end when the profit is realized and you take out all the assets. So there you go. Y'all learned something today.
Yeah.
I don't know. Too nerdy?
That one's kind of intense. I'm not going to lie.
Yeah, whatever. I wanted it to be a big toughie. But Jeremy, real quick.
Yeah.
Before we get to the winners, first of all, I want to thank everyone for joining because without you, this wouldn't be happening. Also, huge thank you to the title sponsor, Double. Double coming in clutch. Right now, you can get their scale program for free for 14 days. Dude, they have built AI into the entire platform and they're continue to wiring up everything. Just yesterday, I didn't want to have to go build an accrual schedule and double accruals. So I just talked to it and said, I don't want to fill out your CSV spreadsheet. Can you just add this asset for me? And it said, yes. What was the date of the purchase? How much is left on it? What do you want to do? Cool. And it just built it all in for me. I didn't have to do any data entry other than talking to my computer. It is so cool. I mean, they are just getting better and better by the day. We're going to be posting some YouTube videos about cool use cases. Regardless, Double is coming in clutch, both for UFAT and for firm owners. Give them a tryout now. Jeremy, anything else to add?
No, I agree with that. I also think that they need to have, I talked to my account manager and he developed this cool little cow emoji thing that you could talk to. That should be the guy you're talking to on their AI platform and be like, go little cow, go do this for me. And because,
Absolutely. All right. So everyone, without further ado, we need to get to our winners. And Coming in third place from the Digital Bookkeepers Association, which, by the way, thank you, Jaime and team, their quick little thing. The Digital Bookkeeper Association, a membership community that gives bookkeepers ongoing training, live support, practical resources, and connections as they grow their business. A $10 gift card to whoever signed in as Peter Parker. Hope you claim that name, but Peter Parker at 5,126 points. Congratulations, $10 gift card coming your way.
Yeah, please. I don't think I saw you, so put your name in the chat, please, so we make sure we get it to you.
Absolutely. In second place, getting a $30 gift card from our pals over at Relay, which, by the way, welcome back, Deanna. Welcome back. We missed you. Is Emily with 5,951 points. Way to go, Emily.
Nice work.
And in first place, getting a large gift card to the Double Swag Shop, where they will let you pick out whatever items you want, double branded, cool gear, and they'll ship them off to you. We have our first place winner, the numbers guy, which I believe is Mr. Greg Kolop, coming in first place. Well done, sir. Everyone else, excellent work. I'll pull up the results on screen here. And if you'd love to join us next week, or in 2 weeks, we'd love to have you join us. Just head on over to that QR code, get registered. I mean, guys, I can't say it enough, but this only happens, if you guys are there playing with us. Please go online, tell us if you had fun, tag the sponsors so they keep coming back and giving us cool prizes so that we can keep sharing them with you. But Jeremy, anything else to add before we call it a week?
Who is Peter Parker? I don't know.
Yeah, that's a great question. Peter, where you at?
Yeah.
Where are you?
No, again, I want to reiterate thanks and show the love to the sponsors. This is going to be cool and we can keep growing it and we can get amazing things to you guys. So
this was only episode number 4. So with all that being said, everyone, Peter, I'm going to leave the chat open for a minute. So make sure you do it. Otherwise, let's cue the outro music. Jeremy, see you next week.
Yes.